Well, the overnights have started off pretty interesting. We had a high of 445 in the overnights. Right now, as I'm sitting here, we're at 443.56. You can call that 444. So, yeah, we'll see what happens as the week progresses. Again, maybe I will be off on this one, and we'll be looking at something over 450 if the numbers come in even, I would say, even at 470,000, 475,000, I think that will be enough of a beat, especially if the energy numbers come in, let's say at, as I mentioned before, as I've talked about for several days now, if the energy numbers come in at 13, 14, or even 15 gigawatt hours, I think this will be a very good beat on Thursday. All right, so what little bit, we got a little bit of news here. We got Tim Urban puts up this a little while ago. You can, if you want to follow Tim Urban, it's wait, but why? Wait, but why? Okay. Went to the mall today, and in typical form, I failed to note where I had parked. I've never done that. I don't know what he's talking about. Instead of looking for it, I tried something crazy and summoned the car from the Tesla app, and 30 seconds later, the empty car emerged from one of the lanes and pulled right up in front of me. He says, "We live in the future." Well, then Mark Valorian, he comes back. He says, "This works very well in a surface parking lot, but in a multi-level garage where it's most useful, you're going to be extraordinarily frustrated." Extreme first world problem, but but that's true. But an altitude sensor would be an incredible add to Tesla for this purpose and to make it possible to use FSD reliably in garages. And then Elon Musk says, not for long. So apparently, the version 14 is going to solve the problem of having using your summon in parking garages. Sawyer Merritt posts this. He says, "Look, Tesla VP of Finance on regarding Giga Berlin, quality, comma, cost, comma, and volume, all achieving new records." Wait a minute. There was volume in that list. Volume achieving new records as we leverage the talent of the entire team there alongside the learnings from the past several years. So does that mean that Berlin's numbers are going to be better than we're expecting? Now, we've had a couple of countries over in Europe and in the Eurozone that have done a little better recently, but we've also had countries that are outside the Eurozone, but that are serviced by the Berlin factory that are doing really well. And so maybe we're going to have a surprise out of Berlin as well. Remember, some of the betting folks are believing that we could come in as high as 505. We come in at 505. Yeah, we'll hit that 560 and change for sure. I'm sorry, 460 and change. Maybe we'll go back to all-time highs way before the meeting. All right, that's enough of that. All right, I promised you that we're going to talk more about the economy. This article from Fortune was absolutely phenomenal. I know Fortune magazine, but no, just because they're biased doesn't mean that they don't do some good reporting and do, especially, they bring in some good resources. So this particular article I found good. While some on Wall Street are worried about a recession, recent economic data show that GDP growth is actually speeding up faster than earlier numbers indicated, as I've been reporting to you for days. On Thursday, second quarter growth was revised even higher to 3.8% from the prior reading of 3.3% on the second quarter. That's after the first quarter dip that was driven by President Donald Trump's trade war. Now, they don't go into the details there, but it was because of a pulling forward of the imports in order to beat the tariffs. And then that would have been rounded out the next quarter. But so you got to take the first quarter, the second quarter, kind of add them together, divide by 2. But now if you do that, you're getting up in the 1.7, 1.8 range rather than 1.5 that we thought was happening. Meanwhile, third quarter growth is shaping up to be hotter. Durable goods orders for August jumped more than expected, according to data released last Thursday, as I reported here. And the personal income and spending report on Friday showed consumption remaining healthy in August while topping forecasts. Given that consumer spending represents over 2/3 of the U.S. economy, these gains more than offset the weakness in housing, which remains buffeted by high home prices and mortgage rates. Now, remember, the mortgage rates are not high. The mortgage rates are average over the last over 100 years. It's just high compared to the last 10 years. And if you add the mortgage rates together with the high home prices, it ends up with a very, very high monthly payment. The Atlanta Fed's GDP tracker now puts third quarter growth, as I've been reporting, at 3.9%, up from an earlier estimate of 3.3%, citing the consumption data and a narrower trade deficit in August. Growth, and there's also the other thing is that we've got very good numbers in terms of investment in business. And that, of course, is not shocking because everything that's just been done in terms of the big, beautiful bill and also all the negotiations that Trump has done, all of those things would point to growth in companies starting to invest in their own businesses by building businesses, adding more equipment, onshoring manufacturing. The article goes on to say growth may not stop at that lofty rate. Stephen Brown, Deputy Chief North American Economist at Capital Economics, said in a note on Friday that the income and spending data should further ease fears that the U.S. is on the cusp of a sharp slowdown. I've been telling you for a very, very long time, the third quarter be good, fourth quarter be great, and next year will be out of this world. He also noted that discretionary spending, which typically is cut when consumers are suffering, drove growth. And while gains in spending have outpaced income for the last 3 months, the August savings rate was still at a relatively high 4.6%, meaning consumers are still not overextended. The rise in real consumption in August means that given the stronger momentum going into the third quarter, we now have third quarter consumption growth tracking as high as 3.3, up from 2.3 last week, Brown added. Third quarter GDP growth could be as high as, ready for it, 4%. To be sure, stronger GDP also means the Federal Reserve will be under less pressure to lower rates. Capital Economics expects the Fed to cut at only one of its two remaining meetings this year, while Wall Street is betting on cuts at both meetings. Now, hopefully, the chairman of the Fed, who I often wonder whether he's smart or not, he should be smart, and sometimes he acts smart, and he's got all these other smart guys around him, but what they are cutting impacts different things even than what Trump is hoping for. Trump wants the mortgage rates to go down. He wants the 10-year bond to go down, but the Fed doesn't have much impact on that. But what they do have an impact on is home builders pay short-term interest, okay? They need a loan that'll last for 12 months or 15 months, 18 months, 2 years. After they buy the property, put up the homes, etc., they need short-term interest. Well, those are the rates that the Fed does have a lot to do with. What about the local regional banks? The regional banks do better when interest rates are low on these, the lower end of the curve, the 2-year, 5-year, et cetera, not the 10-year. When those happen, then the small businesses are better able to borrow. It also helps on car loans, so it makes the car industry do better. Factories should do better because this also helps durables, because when you're buying a refrigerator, you're not, taking out a 30-year loan on it. You're maybe going to pay it off in 1 or 2 years. So to be sure, so what about recession fears? Well, the upbeat growth forecast contrasts with warnings from Moody's, which we've been talking about. Mark Zandi and his statements that we're on the precipice of a recession. So while the third quarter, which ends on Tuesday, looks good, he predicted the U.S. will be most vulnerable to a recession late this year and early next on the impacts of Trump's tariffs and immigration crackdown peak. Well, the immigration crackdown peak, I can understand, but I'm trying to figure out why he still thinks that tariffs are going to get in the way, especially when you've got all this onshoring taking place with people building new buildings and bringing in equipment, et cetera, et cetera. This is going to stimulate the economy, and it's already happening. Moreover, the big, beautiful bill also created a situation where it's in the best interests of small, medium, and large businesses, all of them, to start building and buying equipment. And despite consumption, it says, staying resilient in the face of elevated inflation and tariffs. What? Wait a minute. There's no elevated inflation. What are they talking about? Truflation says inflation is around 2%. So despite consumption staying resilient in the face of elevated tariffs, housing could still lead the economy lower. As Andy has pointed to building permits as the most critical economic variable for predicting recessions, and they're now at pandemic era lows. Yes, well, that's for a lot of reasons. And one of those reasons, of course, is mortgage rates. But I'm not terribly concerned about it because what's happening is that there's an activity taking place that is unique, never happened before. All these AI companies are buying chips and building factories and buying the equipment that goes with those factories and buying the energy and creating more demand for it. All this stuff is happening around this AI boom that is offsetting some of the fact that we don't have a lot of activity in the housing area. The gains in aggregate consumption also obscure the sharp divide among American consumers and the growing reliance on top earners. It's not a growing reliance. It has been this way for 5 years. Larry Goldberg and I have been reporting on it for almost 3 years. And Kathy Wood has reported on it as well. We have this big divide between those over 100,000 who have assets. This is important. People don't understand. Well, I say people, you understand, but these economists drive me nuts, is that if you are an asset holder over the last 5 years, you did great. And so those assets are now throwing off income, and they're making you feel good about the fact that you've got solid assets that are sitting there. If you need them badly, you can get to them so you can spend more freely. So it's not just the fact that people make over 100,000, it's also that their assets have gone up dramatically. Home prices the last 5 years have almost doubled. S&P, I'd have to go back and look, but I know it's 22 and 21 the last 2 years, and it's 15 this year. So that alone would be a lot. All right. Moody's recently estimated that the bottom 80% of earners have merely spent in line with inflation, rather than where the top 20% are driving all the growth. But as long as they keep spending, it should be A-OK, according to this report from this was from not the Wall Street, this was from Fortune. All right. So I'm not going to go back through all the numbers again for you. If you didn't see that before, I will put a card up here. You can go back. You should, of course, look at the entire report for this upcoming week and all the things that are going to be happening this week that are going to impact Tesla stock price as well as overall stock prices. Maybe you have other things that you invest in and also the economy, et cetera. Very good report. And then earlier this morning, that was also more on the economy, more on the general economy, although there was quite a bit of Tesla news in both of those reports as well. So I'll put both of those cards up in case you've got time to go back and look at those. The Tesla stock right now in the overnights, 443.88. I guess that's about where it was when we started. So I would call that 443.93, even as we spoke. So pretty darn close to 444. No clue as to what we'll open at tomorrow, but guess what? I'll bet you it's around that number. That would be my guess. All right. That's all I got for you right now. Looking forward to seeing you tomorrow. It has been great, as always, talking to you.